Hello everybody, this is Donna Robinson with the Robinson Real Estate Report. Today we are doing an introduction to real estate investing fundamentals and strategies. The most common investing question that I'm asked when I speak or teach is, which strategy should I use? The simple answer is the fundamentals dictate strategy. Now, why are fundamentals important? Because they determine the success or failure of a given strategy. If the fundamentals are not in line and supporting your strategy, they're going to actually work against it. And fundamentals change over time, which means that a strategy that works at one point in a particular real estate market may stop working when the fundamentals in that market change. The benefits of knowing the fundamentals: this gives you the ability and the skills you need to avoid mistakes that can cripple your business. It also helps you make better business and investment decisions. It gives you the analytical skills that you need to really look at the situation, apply the best choice of strategy, and that helps you ensure the intended outcome for your investment project. Now let's talk a little bit about as a real estate investor, your mission is to research your fundamentals and then choose a strategy. Here is how I define fundamentals as we use this in real estate investing. Fundamentals are the circumstances involving a given property located in a specific market. The objective is to discover and then evaluate that property and use that information to come to a conclusion as to the appropriate investment strategy. You are basically allowing the fundamentals to dictate the strategy. There are two primary types of fundamentals: property fundamentals and market fundamentals. And we'll talk first about property fundamentals. These are pertaining specifically to a given investment property choice. When you're out looking at properties, it's going to have a location that often is not changeable, so most fundamentals are absolute. Condition is changeable, but it's going to cost you money. Property zoning may be an issue. You have to be very careful not to violate zoning codes when you are renovating or working on investment property. Your financing options, your personal options, will determine how much flexibility and choice you actually have where buying investment properties are concerned. Seller motivation and the needs of the seller have a tremendous impact and are probably one of the single most important fundamentals in most private transactions between ordinary buyers and sellers. After repair value is one of the most important fundamentals also, because all of your investing formulas start with after repair value. So if that after repair value number is incorrect, which is essentially the same thing as market value or appraised value, except that I prefer to think of it in terms of the real street value. How much am I really going to be able to sell this property for? And if you build your formulas from an accurate after repair value, all of your numbers should work out pretty well. And then you have specifics, of course, fundamentals that will vary from property to property because all properties are different. Examples of market fundamentals: things like interest rates and job growth have a broad impact on what's going on with housing. Average rent rates in a given area, of course, those vary from area to area, sometimes pretty dramatically. Some cities, the rent rates are 10 times what they are in other cities. There's generally good fundamental reasons for that, like location and so forth. The vacancy rates in a given area are very important, because if you're trying to sell a property or rent a property, you don't want to be stuck holding a property in an area that already has a lot of vacant properties on the market. This in turn plays into what I like, the supply-demand ratio. This is something that everybody should look at before you buy a home. In boom times, we generally have more demand than supply, but when we have times like we do right now, a struggling economy, relatively flat job growth, falling incomes, that greatly reduces the demand for homes relative to the potential supply. And of course, Market fundamentals will vary from one local market to another. Now, what are strategies? A strategy is a plan, a method, a series of maneuvers or stratagems for obtaining a specific goal or result. And in real estate, we might say we want to make a lot of cash, or we want to sell quickly for cash, or we want to rent and hold for income. Basically, all investing strategies are in one of three categories. It's either a buying strategy, a selling strategy, or a holding strategy. Some common real estate investing strategies: wholesaling, which is also known as quick flip or quick sell for cash, buy low, sell high. Retailing, typically the world of the real estate agent, where you're selling properties at their full market value, generally to owner-occupant buyers. Rental property, of course, the best known of the strategies probably, landlording and holding property for cash flow. Short sales, a strategy that in early years, past years, was not that common, but because of the high foreclosure rates that we have had and continue to have, relatively speaking, short sales have become a pretty well-known and fairly common strategy, generally used on the buy side to create some equity. Subject to the existing mortgage is a very cool strategy wherein you take over payments on the seller's existing mortgage. You basically just start mailing the payments in, and the loan stays in the seller's name. There are certain good reasons and advantages to doing that, but it's a fairly rare occurrence for most people because sellers have to be motivated in the right direction to be willing to do that. Notes, of course, is another popular strategy that allows you to hold for cash flow without the hassles of ownership. Wholesaling, well, let's review some of these strategies in a little bit more detail. Wholesaling fundamentally requires lots of equity. Generally, because of that reason, is generally more pertains to older homes, although it's certainly possible to wholesale a newer home if you can get it at a low enough price. Usually in older neighborhoods. Generally, there's usually a good number of repairs. Rehab costs should be manageable, but are generally significant relevant to the value of the property. And these days, most wholesalers in the typical market are buying at around 50 cents on the dollar. And you might think that sounds crazy if you've never done it, but that's actually fairly common. And usually you're doing a buying deal at this price point so that you can flip that property to another investor and make a quick cash profit. Another strategy, rental property. Fundamentally, this is the big challenge these days. The costs of the property, the cost of ownership, must be well below the rental income to ensure stable positive cash flow. And that means you need tenants with steady income from good jobs. And that's something of a challenge these days, where we've got more and more folks who basically incomes are falling, generally, according to the United States Census Bureau. And that's making it tougher on the tenants when the rent continually goes up. There is a limit, by the way, to how much rent you can charge. The old rule of thumb is that, let me just say this about my comment. There's a limit to what you can charge simply because people will not pay above a certain amount. They'll go on and buy. If the rent rates become higher than mortgage costs, then you have more people moving out of rentals and buying because it's cheaper than renting. So there's a balance there between how much rent you can charge and how many people will stay in the rental market. The old 1% rule that you may not be aware of, I threw that in here. Rental property should rent for at least 1% of the market value. And this was a common rule of thumb 30 years ago. In the housing boom, it was pretty much tossed aside because there was no such thing as getting 1% of the value of the rent when things were going up as fast as they were in the early 2000s. That market, though, has since deflated, and it shows the wisdom of this 1% rule. If you violate this rule, you will eventually collapse if you're not collecting enough cash flow. And buying subject to the existing mortgage. Hopefully, when you're watching this video, you'll also have access to a case study that I've recently recorded on this topic. where I discuss an actual deal that we did on a subject to the existing mortgage transaction. This is buying property by taking over payments on the seller's existing mortgage. The fundamental issues here are making sure that that existing mortgage payment makes sense. Typically, that's a way to interpret that would be to say this mortgage payment should be less than I can charge to rent this property, so that if I can't sell this property or something happens and I have to rent it, I know that I will have positive cash flow. It's always good to have a plan B because sooner or later you're probably going to need it. Strategy short selling. Selling a property for an amount that is less or short of the amount owed on the existing mortgage. It's been used heavily in recent years as a buying strategy to force a discount in the price, which generally will create some equity when the property is otherwise underwater, and usually a foreclosure is pending before a bank will approve a short sale. A mix of strategies is common. This is one of the things that I think folks get confused about when they're first starting out. It's not uncommon to use one strategy to buy the property or to obtain control of a property, and then use another strategy to sell that property. One of the reasons that understanding the interplay between fundamentals and strategies is so important is because it allows you to understand this concept of using one strategy to buy and another to sell. When you learn any given investing course, most investing courses are based on a particular strategy, such as wholesaling. That's fine if you know you need to study wholesaling in particular, if that's fundamentally a good choice for your area. But once you learn wholesaling, you don't know how to mix that with anything else. It just is what it is. And you can't, if the fundamentals change, like for example, prices get too high in the general market, when a market overheats and prices get really high, wholesaling stops working. And I've lived through that. So you sometimes don't expect changes to come like they do, but it's very important to be adaptable and be able to mix strategies so that you can adapt to changing market conditions. Okay, let's quickly review. Fundamentals are the circumstances that you must work with on each given property, and those include location, condition, seller motivation, repair costs, equity, after repair value. And strategies are the methods you choose for reaching those goals, and those include wholesaling, quick flip for cash, kind of the same thing as wholesaling, retailing, selling at full price, taking over the existing mortgage, short sales for homes that are pending foreclosure, and rental property for cash flow. But in all the cases, the fundamentals dictate the strategy. Thanks for watching. And if you'd like to know more about this subject, I have a special online workshop that is actually the only workshop of this type that gives you a fundamental approach to real estate investing. It's all online. There's nothing to download, nothing to install. I created it myself to use in the field when I was out 5-6 days a week, week in and week out, year after year, looking at hundreds and hundreds of different houses each month. This is actually the methodology that I developed myself to do hundreds of real estate deals. If you're interested in this course, want to read more about it and or check it out, you can go to robinsonrealestatereport.com. And let me just tell you that right now, if you try the online investor workshop, you'll get a free 30-minute private coaching session, telephone coaching session with me personally as a bonus. So go to robinsonrealestatereport.com and check that out. If you're into having a really solid investing career, that is the perfect place to start if you're a beginner. And look me up on the web. I would appreciate hearing from you if you like the videos or if you've got questions or you'd like to see videos on particular topics. Here's some information on how you can hook up with me, and thanks again for watching.